All right, so we're going to be starting today's session with what's on my charts. We're going to go through this and just kind of give you an idea of what's on here. I have my notepad up here so I can write along what we're talking about. And most everything on all my charts are the same. My weekly, daily, hourly, 15, the 5-minute, and the 2-minute all have the same stuff. And they're all structured the same way. So I'll go over that overall, and then I'll kind of dive through each one more specifically. So for example, we have price. Of course, I think everybody has price. Now mine are grayed out. You can see that here that I don't have the red or green bars. Henry has black and white. It just kind of depends. I grayed mine out a long time ago. I had a mentor who I was following, and she said, maybe think about turning them off, or because you get kind of the psychologically affected by the colors. If you see green, you get really excited. If you see red, you get fearful. And really what you're trying to do is make sure you stay even keeled through your trading journey. And I found that muting those colors helped. The other thing that I found was important for me were the moving averages. I'm really, really big on moving averages. And when I had colored price candles being red, green, I couldn't easily see what the moving averages were doing and how they were and just how they were interacting with price and each other. So for me, I like my price to be grayed out. Now, after that, we can just start with moving averages. So moving averages. And what do I have? Well, let me kind of put a couple more hyphens here and then down here. And what we have there is we start with the 8 and 21 EMAs. Okay, so for me, that is the blue line and the, call it orange line. Now, you can pick any color you want, any combination. Everybody has their own preferences. This color combo was more just kind of how I set it up based on when I started learning. And I just grew to like it. I found that the red was fairly important. And I like to see it because I like to see when price actually comes down to it. You can see oftentimes price likes to bounce off the 21 EMA. So I made it a bright, bold color. The 8 EMA is important too, but it was kind of a lighter thing. And I think the most important thing for me is just to have different colors. I'm not going to have red and orange. I want them to be differentiated because I want to be able to clearly see when one crosses over the other or when it's over or below the other. So I do that one. And then from there, let's do 2 more. And I use the 50 and the 200 SMAs. And for me, I've chosen to do that. Let's kind of leave that back up. I've chosen to do the magenta colored for the 50 SMA. This, over the course of time, I found the 50 SMA was the absolutely most important moving average for how I trade and how I learn stuff with the market. You can see even back here with the SPY, how it bounced off of and stayed above the 50 SMA even when it went through the 21. So that was something I found was important. I think institutions and probably algorithms and all that, they're probably programmed around the 50 SMA. Now, notice I'm not specifying the 2-minute or the hourly or the daily. All I'm talking about are the moving averages because all of my time frames are the same except for the monthly, and I'll get to that a little bit later. So we have that, and then the 200 SMA is the red one down here. Maybe you can call it salmon, whatever you want to call it. But I chose that one. Again, kind of a major moving average, the overall trend. And honestly, I just didn't really like the color palette of anything else. So red worked for me. I didn't like yellow. I didn't want it to be green. Couldn't be gray. I didn't want it to be white. So I was kind of running out of colors and I picked something. Now, some people have said in the past that my 21 as being orange and my 200 being red are a little bit too similar. And how do I not get confused? Well, because honestly, sure, there are times when those moving averages get close to each other, but I think for the most part, when a 21 is a 21 and a 200 is a 200. Usually you don't get them confused. So I'm not too worried about that. Other things you could do is you could make certain moving averages thicker and others thinner. So, maybe you make the 200 thicker if it's a more important one for you. Or if the 50 is really important, maybe make it thicker and you could do something like that. So I had to find the right one for me. Now, where we differentiate with this is if we come over here to the monthly and the weekly. The only changes I've made, let's start with the weekly. The only change that I've made is that I've added the 30. And this is the 30 SMA, and you can see that is the green line. That one I did color green, mostly because I don't use it too much. I'm just aware of it, so I just need to kind of have it be in the background, and it was kind of the only other color that really worked for me as far as something that I could pay attention to that didn't confuse any other colors. So 30 SMA. And I picked that up from someplace, and it makes some sense, and it's just another one that I kind of add to my list. Okay. Now on the monthly time frame, since the monthly is so big, it's such a big time frame, it's very slow, I found that I really didn't need a lot of the moving averages for the reasons that I have on the other time frames. I really just wanted to see what is the context. Is price going up? Is it going down? Like, what's the overall trend? And I found that the 10 SMA for the simple moving average for the monthly time frame worked well. Now, mathematically, the 10 period simple moving average for the monthly is about the same as the 200 period SMA on the daily. Kind of interesting, right? And a lot of times, traders, institutions, books talk about the 200 SMA on the daily chart as being an important overall trend. Well, if that's the same as the 10 SMA on the monthly chart, well then yeah, it sounds like it's pretty important. And so I do that, and that's what the blue line is. So I got rid of all the small moving averages. I have the 10, I have the 50, and I have the 200 for the monthly chart. And that's it as far as moving averages. Let me come back here. We'll go back to our note thing. The other thing that you guys can kind of see that I have on the at least price charts are the Keltner channels. And it's the third factor and 21 SMA. Now, I call them ATRs. I picked that up from John Carter. That's what he calls them, average true range. But really, they're Keltner channels based on the third factor off of the 21 SMA. So that's the dotted lines above and below. And I picked those as kind of a greenish teal color. I wanted them to stand out a little bit more. And really, I just find that price 90% of the time stays within these third ATRs, and really helps give me an idea of when price is getting overbought or oversold, and when it's a good time to buy or a good time to sell. So that really gives me a good, it reminds me of a freeway. And these are the lanes that I have to stay within. And you can see that the market tends to stay within those lanes 90% of the time. And so I found that to be very, very helpful for my trading. So that's the Keltner channel. And then, of course, we have volume. And for me, the volume is the very, very faint gray bars in the background. Again, what might be nice, I don't have my red and green candles to kind of keep things from, messing with me psychologically. What would be nice, and I know some charting platforms have this, is to know when certain volume bars are up days or down days. That would be helpful. That would be another way for me to know if it was an up day or a down day, red candle, green candle, without actually making the candles colored. If I could color volume, fantastic. I know stock charts can do that, and some other trading platforms can do that. But for Thinkorswim, I wanted to just keep it in the background. Volume can be important, but it's not crucial. It's not crucial for me. And so I just want to kind of know what it's up to. And I didn't want it to get in the way of my screen or cluttered up, because you can see clearly there's a lot of it. And so just kind of the faintest little something for me to see what's going on back there was important for me. So Mel, yeah, the 10 SMA on the monthly chart is let's get over here, is the blue line. And the Keltner channels are kind of this dotted greenish turquoise color. All right, so that should be good there. And then let's get back to this. And if we look what else I have, we start going down on the indicators. We have Moxie, if I can spell it right. Now, this is my own indicator. I created it, and I built it, and I continue to refine it and work on it. The basic math of the Moxie indicator has not been touched in years, which I am proud of, because it means it works well for me, and I haven't had to massage it and change it and this and that or the other thing. So you can pretty much trust that it's the original, it's the OG, and it is what it is. And anything else that we've ever added are really just things that surround the Moxie indicator. Like the 15-minute power dots or price triggers or anything else like that, just to make interpretation or reading of it a little bit better. That's the only thing we've ever done. The math is all just the same, and it's great. So the Moxie indicator is a momentum-based indicator. I'm going to keep bringing that back. And it has above 0 and below 0. Above 0, positive energy. Below 0, negative energy. And then we also look for divergences, like negative divergences or positive divergences. And that's what helps us set things up. So let me just kind of show you, for example, GDX. There was a good example a while ago, back and through here. And what you could see was that price was going down, the Moxie indicator was going up. There's your positive divergence. Even though price is going down, the Moxie indicator is moving up, trying to tell you like, hey, energy and momentum is starting to move up. If I'm short, I should be paying attention to this. Maybe I don't want to be short. And if I was looking for a low opportunity to buy, well, it's telling me that internally momentum and energy is starting to change directions. Maybe I want to look into this as a viable opportunity. And then with that, we have what's called the Moxie price trigger. And really all that is, it just denotes on price when the Moxie indicator crosses over from below 0 to above 0. And when it goes from above 0 to below 0, we have it red. So, up or down, red or green. And I just, I figured out that it was very important to know when the Moxie indicator crossed 0. And so I added the Moxie price triggers. And that's just a visual reference. And then, yeah, so Johnny, as far as the 15-minute time frame, why do I have 2? Let me maximize this for us. Why do I have 2? Well, in my experimentation and my figuring out of the Moxie indicator, when I was building it and working with it and honestly having it teach me how it wanted to work, I found that on the 15-minute time frame, I would get a lot of kind of false positives, because on the other time frames, it's very important when the Moxie indicator crosses over 0, right? Well, the 15-minute time frame was just so fast, it's a quick time frame, that I found that the indicator was crossing above and below 0 a lot. And it wasn't meaningful. It was just like, be above 0, below 0, above, below, and clearly the trend was still down or the trend was up or something like that. And I was like, this is really not working very well. And what I had to do was keep kind of experimenting. And what I found, again, just through trial and error, I spent a lot of time on this thing. And I had some programmers that were helping me kind of take my ideas and put them to practice. And I found, again, just through observation, trial and error, it's kind of like a scientist, going out there with a thesis, and then you have to go test that thesis. And I found that when I started using different math equations for the Moxie indicator, it started to paint a better picture. And that picture was when the two Moxie indicators were spread from each other, it meant they didn't agree with each other. And what it meant was it wasn't a strong move. There wasn't conviction in whatever direction that was going. And you can see here, sure, yes, price went up, but notice how it was really just a bounce and a downtrend. And you could see that eventually price just kept going lower. So that meant that this up move and that this indicator right here crossing over 0 really wasn't meaningful, because the indicators were spread from each other, had a very big gap between them. Now, what's more important is when they become one line. When they get really close and they overlap each other and they look like one line, that means they agree with each other in that sentiment, whether it's up or down. And you can see here, notice how the Moxie indicator got right on top of each other, and notice how that was the beginning of this big trend to the downside. So very, very important. The next opportunity, how about this one? Look how tight those two Moxie indicators were. They are right on top of each other. They look like one line. That is a strong move. And you can see again, we have another strong move as that starts to set up this series of events. Now, because it's such a fast moving average or fast indicator on the 15-minute time frame, there's going to be a lot of individual setups. It's not going to be like the daily or hourly where you kind of see a trend change and then it lasts for a long time. It's the 15-minute time frame. There's a lot of little movement. So that's why you can see a lot of little different setups over the course of time, because we're trying to find a very small picture. So I have math for that, and I have the 15-minute high and the 15-minute low. The high is good for swing trading and longer term trends. The low is good for day trading and shorter term trends. One's a little bit stronger, the other one's a little bit more nimble. And we have those factored in as well. The other thing that we did is we added these Moxie power dots, and really that just denotes when those two Moxie indicators are within 10% of each other. Again, they're not always perfect, but what it's trying to tell you is that there's something that could be happening. It's almost the best way I could kind of relate this is it's kind of like the squeeze, but for the Moxie indicator. If you guys kind of put that in your mind, that's a good way to think about it. So that answers that, and that's the same for all the time frames. So we come back and we have the Moxie indicator, and below that we have the squeeze. Well, TTM squeeze, or pro squeeze. And I think everybody in the world knows about this one. So I work at Simpler Trading. I represent them, John Carter's tool. Hey, I'm going to have the squeeze on there. And it's good to know. It's not necessarily a primary tool for me, but I find it handy to see it, and it kind of puts a little finer point of what I already see. Because I do a pretty good job about reading charts, but to have indicators kind of tell me the things that I'm seeing with my own eyes to confirm it helps. And so whether it's the pro or the regular, I think you can kind of get by with either one. And for me, I didn't really like the colors. I didn't agree with the way that they made their colors. And so let me see if there's, I'll show you. Yeah, here we go. This will do right in here. So for me, and I guess I can't see the yellow, but for me, when you're not in a squeeze, I want it to be grayed out, because I think, okay, if I'm not in a squeeze, I don't care about it. I don't need to know. And then I kind of thought it should be like a traffic light, and so or flame. If it's green, okay, it means like, hey, casual heads up. You might want to start paying attention to it starting to get into a squeeze. And then when it gets to red, like, hey, okay, you really need to start paying attention. I'm getting into a bigger squeeze. Now, if you guys can find me an example where there's a really tight squeeze on something, where am I gonna? There we go. Here's a tight one right there, and you can see I then took, okay, what is the ultimate tightest squeeze? Well, I made it orange, yellow, orange, something like that, because I thought that would really catch my attention. It looks like a flame. You're going from green, red to orange, and I thought that was it worked for me. And I didn't really also care about the histograms, so I changed those to gray and white. Again, they're there. I am aware of them, but they're not crucial to my trading, and so I kind of mellowed them out because I don't really need to see them too much. Bob C, no, there's not a Moxie indicator for the 30 or the 78 minute or the 195. However, what you can do is the indicator auto-populates for time frames. And if you put the Moxie indicator on a 30-minute, it'll revert back to the 15-minute type setup. If you put it on a 78, it'll revert back to the hourly type setup. Now, I can't give any guarantees or promises about how it will behave, because right now with the, say, daily and hourly timeframes, the Moxie indicator is tuned that the best trades have the Moxie indicator firing right when price is at or crossing over the 50 SMA. So if you start using it with the 30 or the 78, it will still work, but it may not be as precise or follow the rules that I have as exactly. So you feel free to use it, see if it works for you and your style, and if you can adapt it to that time frame. So it'll work, but the rules just might change a little bit. Oh, nice, Mark. You have found that the power dot and squeeze together generally very powerful. Well, that's kind of the whole point of the Moxie power dots, is to tell you that those 15-minute Moxie indicators are getting tight, and that there's likely something to happen because they're starting to agree with each other. So as I said, it's kind of like the squeeze of the Moxie. So putting the squeeze and the Moxie and the power dots together, if you guys are short-term traders and you're down there on the 2, the 5, and the 15 and the hourly, that might be a pretty potent combination. So yeah, thanks for letting me know that and telling other people that it's working for you. All right, so then we go down a little bit further, and I do have Sam's high-low. Get rid of this. Let me spell that better. Let's do high. I guess he likes it high-low pro. And that's from Sam. That one, I find it like an oscillator. Again, it's kind of a secondary indicator for me. What I like is arrows. I don't pay too much attention to the oscillation of being high or low. And for me, I really kind of only look for the upside. So I really kind of only look for his up arrows. I don't care too much about the down arrows. I have other things I like to look at for that, but that's what we did. And you can see I have it so squished I can't really even see the line, whether the line is high or low. I'm really just kind of looking at his arrows. So for other people, it'll do different things, and I know people love it. But for me, hey, I just have it on my charts. I don't use it too much, but it's confirmation. The other tool that I have is the slow stochastic. Hopefully I spelled that right. And the slow stochastic, you can see the numbers that are here. So if you want to program it in yourself, it's another free indicator. And this one, again, it's like an oscillator. I picked this one up years ago from another trading buddy that I had. And the thing that we really worked on with this one is the lows. It was a good way of kind of pinpointing lows, or at least helping to figure out where the low might be. I like the Moxie indicator. I like my moving averages. I like my time frame combinations that I use. But again, to kind of help build that case of, hey, this is a good dip buy, or this thing's starting to get pretty oversold, we should expect a turn. I like that to help me with the slow stochastic. And again, you can kind of see, like, here's where it got over to the low. Hey, that was a low. How about this? That was a low. That was a low. And then you could see, hey, the slow stochastic rotated to a low. That was also a low. So yeah, and that's all I use it for. I don't use it for the high side. I don't use it for exiting. I don't do it for anything on the long side or upper side. I only use it to help pick lows and to help me define and see those kind of things. Now, there are some details that you can use with the stochastic. Like, you can just use it as, hey, it's down in the oversold range. You know, that makes sense. You could look at double bottoms. You could look at positive divergences. You know, there are a few other things that once you start looking at the slow stochastic, that'll kind of pick up from you, or that you'll pick up from it. So yeah, that's kind of what I'm looking at. Now remember, it's just an oscillator. It's not exactly perfect for a lot of things. And when you're in a downtrend like this, it can persist at the lows. So don't go use it just blindly. And it really works best in an uptrend, but it helps pick those lows in an uptrend or tell you when price is kind of getting oversold. So again, ancillary, kind of secondary tools to help you kind of give you compliments to the whole thing. But if I were stranded on a desert island with internet and I guess solar power, all I would need is the Moxie indicator and then anything that's on my price chart. All the other indicators can go away. I just need Moxie and my moving averages with the counter channels. It's really all I need. So down to the basics. MB, why not fast stochastic? Well, honestly, that's kind of just what I was taught. It was presented to me by a trading friend years ago. He made a good case about it. I looked into it. And I'm like, yeah, I like it. I see what's going on. And probably for my kind of trading and swing trading, the slow was a little bit better. So go tinker with it. You know, I think that's really the other important thing with trading is you kind of need to make it your own. You need to figure out what works for you. There were other indicators out there that other people had great success with. I tried using them, and they just didn't work for me. I didn't get it. I couldn't see it precisely enough. I didn't find that it was reliable enough, and so I didn't use them. But I think over the course of time, you will take some time putting things together, and you'll kind of figure out what works best for you, and you'll make your own system. And whether that's the Moxie indicator, or the squeeze, or the high-low, or anything else, you learn from us, you pick and choose what works for you, and then you apply it to your charts and you make it your own. And that's kind of how I made my journey. That's how I came up with the Moxie indicator, and that's how I kind of came up with my trading charts. And I know what I focus on and what I don't focus on, and that's kind of what works out. Bob, as far as talking about scans, this video is already getting pretty long for my chart setups. Let's save that for another one. And if you are in the Moxie room, then we can talk about that today as well, or the next time I'm in the free trading room. So just remind me. But for this one, we're going to pass for that. And yeah, we'll get you one last shot about what's on my charts. So if you guys are interested, you can see this. And then that's pretty much it. So hope you guys enjoyed it. Thanks again, and we'll catch you later.